Good afternoon, sir.
Good afternoon.
Sir, I would like to thank you for taking your precious time for letting us interview you. Sir, can you just give a short introduction about yourself?
Yeah, sure. Myself, Vijay Kumar Badigir. I'm from Karnataka. From last 10 years, I've been staying in Bangalore. With regards to my education, I have done my graduation in BA. So later, I worked in a BPO industry for 5 years. But personal finance, money management, and investment, it was my passion. I was very much interested toward personal finance and money management. So in my when I started to work, I wanted to invest my money, but I didn't know that where to invest my money. I didn't know that how to invest my money. I didn't know that how to compound my money. So in my early stage, I have done a lot of mistakes. In my early stage, I lost some money, but later what I did is I started to read good books, and I started to invest my money, good books and good practical experience, which has given a good shape for my investment journey. Along with that, from last 5 years, I have been educating personal finance and money management with using social media. I'm getting good responses. This is all about myself.
Yeah, okay, sir. Now, my first question is what are the key points when you analyze a company, sir?
Before investing into any stocks, the first we need to check what is their business model, how business works. So, is it a product company? Is it a service company? It is a domestic company. It is an international company. The second one is what is the competitive advantage they are having. So, how they are what do you mean by competitive advantage? Competitive advantage is nothing but how they are different from other competitors. The next one is growth potential. Is there any growth potential in the industry or not? What is their plan? How they want to grow in the future? The next one is leadership, management. Leader is like a captain of the ship. The leadership will decide whether stock is going to be a successful or not. So leadership, it will play very important role. Next one is financial. So whether they are doing good profit or not, so whether they are having good financial stability or not. So last one is valuation. Valuation is nothing but so if you want to invest into any stocks, so let's say that if you want to buy something, if you buy the anything at higher price, it doesn't make any sense. Everybody wants to buy at the lower price. In the same way, when you want to invest into any particular stock, if you buy the stock at lower price, it will make a lot of sense for you. If you buy the stock at higher price, it doesn't make a big difference for you. So that's the reason if you are buying the stock, you have to buy the stock at lower level. For that, we call it as a valuation. So quality of business, quality of management, and long-term growth and valuation. So these are the main points I will look at when I want to invest into particular stock.
Okay, sir. My next question is how is competitive advantage is important in a business?
Okay. So first of all, what do you mean by competitive advantages? So how companies different from others? So I would like to give some example. So across the world, many companies, they are selling mobile phones. So if you look at the Apple mobile phone, so they are completely different from others with regards to product. Product is high quality product. With regards to branding, the branding is presence across the globe, and people love to use Apple phone. This is how they are different from other competitors. In FMCG segment, so FMCG products are nothing but a product which we use in our day-to-day life. It can be paste, it can be soap, toothpaste. So in FMCG segment, Hindustan Unilever, which is one of the fastest growing company in India, how they are different from all competitors. So they are having strong product portfolio, as well as they are having strong distribution network. What do you mean by distribution network? Once you manufacture the product, you should be having a strong network to reach to the end consumer. For that, we call it as a strong distribution network. So that's the reason Hindustan Unilever, a leader in FMCG segment from last 10-15 years.
Okay, sir. My next question is how industry dynamic and trends will change over the time.
Okay, so change is the law of the nature, law of the universe. So every year, every day, even we will also change, world will also change. In the same time, so industry will change, so industry dynamic will change. I would like to give some of the example. So earlier telecom industry, it was we used to use landline, so land phone. Later we got into mobile phone. So in the mobile phone, now we are aggressively using internet. But just 10 years back, internet was too expensive. If you want to use 1 GB internet, we used to pay 200, 300 per GB. So after that, what happened is Jio has completely disrupted the entire telecom industry. Now they are ruling the entire telecom industry. So they have given a good different shape to the telecom industry. This Reliance Jio, which has given a birth for a lot of digital business. So this is how all the time industry will change, industry dynamic will change. For that we call it as a value migration. So what do you mean by value migration? I will give some more example. So just 10 years back, if you want to buy something, we used to go physically. We used to go physically to the store and we used to buy. So now situations are completely changed. So what we are doing is we are buying online. Now e-commerce industry which is growing very faster. So in the same time, I will give some more example. So with regards to consumption, around 15 years back, so if we have 5 members in our family, so we used to have one soap and everybody used to use that soap. Now we are not doing like that. Because of preference, because of brand awareness, so all 5 members, they are using different soap because of their interest and because of their brand. This is how industry dynamic will change. So industry is going to change all the time. I will give some more example. So just around 10 years back, if you want to promote something, if you have some product, if you want to sell that product, you used to go with a traditional marketing. Used to place order in newspaper, billboard, pamphlet, used to distribute. So after COVID pandemic, what happened is the traditional market is completely disrupted. So now that market, that method will not work. So because of social media, so because of artificial intelligence and machine learning, so based on the customer interest, based on the customer specification, based on their age group, we can target the right audience using the artificial intelligence and machine learning. So traditional market, now it will not work. So now the trend of digital marketing. So this is how all the industry will keep on changing over the time.
So my question is, can you explain the process of fundamental analysis of stock selection with an example?
Okay, sure. What I will do is, so there is an application called Screener. Everybody is able to see my screen?
Yes, sir. Yes, sir.
So in Screener, you have to create a login ID and password. So this application is for free. And here you have to give the company name. Now I will give the company name Titan. So here data will be there about company, their business model, and in which segment they are present. So everything will be here. Here you can read once. Along with that, there is an investor presentation here. So I will show here. For this, we call it as an investor presentation. Here, all the data will be there with regards to their business, how this business works. So everything will be given here. So here, what I will do is here I will go business segment. So if you look at the Titan, their major businesses, the first one is jewelry business. Second one is watch and wearables. The third one is eyewear segment. Next one is fragrance segment. The next one is fashion and accessory. And Indian dress wear. So in each section, so with regards to jewelry, so separately I will go to jewelry segment, I will read everything. So with regards to watch segment, I'll go to watch segment, I will read everything. With regards to eyewear segment, I'll go to particular segment and I will read everything. So each section, I will go in depth and I will read everything.
Okay, sir.
So each point we need to read, and after that I will conclude whether to invest or not.
What are the key financial metrics you look at when analyzing the companies?
The first one is revenues, next one is net profit, return on equity, return on capital employed, so debt to equity ratio, PE ratio, and shareholding pattern. These are the key financial metrics I will use so analyzing the stocks.
How do you assess the financial health of a company, sir?
Whether profits are growing consistently or not, that we need to check. So along with that, whether they are reinvesting the money or not into the business. So if any business wants to grow, whatever the profit they are getting, they have to reinvest into the company. So then only the business will grow. Then only they can sustain for a long time. So these are the factors I will look at. So with regards to financial health and financial stability.
So my question is, how do you
Okay, so if you want to exit the stock, the first one is when company is already grown, company is already created huge wealth from last 10 years, 15 years, then you need to exit. The second point is if there is any change in the fundamental, if there is any problem in the company, then you need to exit the stock.
So I'd like to know about the importance of management presentations and earnings call on research process.
Management presentation, investors presentation. So these are the very important parameter we need to check before investing into any stock. Here we will get to know about their business. What is their business? How company makes money? Is it a product company? Is it a service company? We will get to know about who is the promoter, what is their education, what is their next future plan. All the information we will get to know. So in investor presentation and conference call. So that's the reason we should read the investor presentation and conference call before investing into any stock.
Can you tell us what software or tools you use to research the stocks?
Okay, so there are many softwares and applications. One is Money Control, second one is Screener, the third one is MetaStock.
Sir, what are the factors that you usually consider while in the valuation process?
To identify the valuation, so there is a ratio called PE ratio. Valuation is nothing but so before investing into any stock, if you buy the stock at lower price, so in the long term, it will create you huge wealth. If you buy the stock at higher price, it doesn't make any sense for you. So that's the reason valuation it will play very important role.
So my next question is, can you share any specific red flags, sir?
So the first red flag I will see, if you check the particular stock chart, this is a Yes Bank chart. So you can see here a lot of fluctuation. The price has been stagnant for a long time. This is the
Reducing.
Yes Bank chart. This is not good. But
Yes,
if
sir.
you look at the stable company, the stable companies like a Reliance, Titan, HDFC Bank, Kotak Bank, if you look at the Kotak Bank chart, so consistently price has been in an upward trend. The stable company always go like this. So this is the first red flag I will see. The inconsistent profit. If company wants to sustain for a long time, they have to make a consistent profit. So one year they are doing good profit, next year they are into loss, the next year sudden increase in the profit. So these are the major red flags which I will see. The next one is higher debt ratio. The company shouldn't have too much of debt. So if you have higher debt, if you get the profit also, first you need to pay the debt. So next one
Yes.
is if they are having legal issues, if they are having any scams. So these are the red flag which will come across before investing into any stocks.
Okay, sir. Thank you. So my next question is more like a practical question. So how to build a balanced portfolio, sir? Like in general.
Okay, so if you want to build a balanced portfolio, so there is a mutual fund also, there is a stocks also. So you have to build a balanced portfolio between mutual fund and stock. If you're a beginner into the stock market, what you have to do first, you have to start with a mutual fund. So mutual funds, because mutual funds are managed by the professional fund managers, they will be having 10, 15 years of experience in the industry. They will be having a tone, they will be having a team. They will know which stock to invest, when to invest, how much to invest. So that's the reason as a beginner, so we have to start with a mutual fund. In the same time, you have to learn the art of stock picking. So you should understand the business, how company works, how they are making money. So what is their business model? So is it a product company? Is it a service company? Is it a business is monopoly or oligopoly? Is it a duopoly? So these are the all point you need to study. You need to understand. Once you started to understand, once you started to learn, then slowly you should start investing into the large cap stocks, because large cap stocks, they are less volatile in the nature. They are already well established companies, well regulated company. So that's the reason in the early stage you have to start investing into the blue chip stocks. So after once you get the comfortable, then you can start investing into the mid cap and small cap. Overall you should have a good balance between mutual fund, large cap stock, so then mid cap and small cap. This is how you are going to create a balanced portfolio.
So you just spoke about mutual funds, right? So can we know more about it in detail and how it works?
Okay. So mutual fund is nothing but a mutual fund is a trust. So here more number of investors will be there. Let's say that I am also investor, you are also investor, your friend is also investor, but we don't know where to invest, how to invest our money. So here what will happen is in mutual fund, the mutual fund they will hire one fund manager, experts. They will be having 10 years, 15 years of experience in the industry. What they will do is behalf of us, they will invest into the securities, they will invest into the stocks. The stocks, they are going to grow in the future for next 5 years, 10 years. So they will start investing into the stocks. So behalf of us, they will generate a return. So let's say that you have invested 100 rupees, your friend has invested 20 rupees. Based on your money, based on your investment, you are going to get the return on a pro rata basis. There will be a AMC asset management company. They will completely take care of this all the process. So if you don't have any, if you don't have too much knowledge with regards to stock investing, so in the early stage, if you start with a mutual fund, it is going to be one of the best investment option, because this mutual fund is well regulated by the SEBI, Security Exchange Board of India. So everything will be very transparent. So that's the reason in the early stage, if you don't have too much knowledge about stock market, if you don't know where to invest, then simply invest into the mutual fund is going to be one of the best option, because it's a well regulated.
And can you tell us about some of the common mistakes new investors make?
In the early stage, most of the retail investors, they will commit a lot of mistakes. The first of all, what I would say is stock market investment is a long term game. So most of the retail investors, they will always look at the short term picture. So they will always look at the short-term picture, but in the long run, they will miss bigger picture. The some of the mistakes retail investors commit is, so in the early stage, they will invest based on the tips from the friends and relative. So somebody says that just invest into XYZ stock. So based on their tips, based on their recommendation, they will start investing. So, but tips, this is not going to work for a long time. So this is one of the biggest mistake most of the retail investor will commit. The second mistake is trading. Once you come into the stock market, there are two ways. The first one is investment and second one is trading. Investment is a long-term game. So if you want to invest into the stocks, first you should understand the business. What is their business? How they are making money? What is the plan they are having to grow in the future? So this is the investment. The second one is trading. So if you want to make money in stock market in a short time, there is a trading. So, but trading is not easy as we think. So if you want to become a trader, first you should be having good knowledge about technical analysis. The technical analysis, along with that, you should be having some 2 3 years of practical experience in future and options market. Then only you can make the money. In 1 or 2 days, you cannot make the money. Most of the retail investors, new investors, instead of starting into the investment, first they will go with the trading. So here it's a high risk, high return game. So most of the retail investors, they fail in the trading, because trading is not easy as we think. So this is the biggest mistake. And panic selling. Stock market is like always go through the cycles of ups and downs. It doesn't go always up. It will fall also. When it falls, it will fall very badly. In that time, so most our portfolio will go negative. It can go to 10% negative, 15% negative. Sometime it will go 20-25% negative. So most of the retail investors in that time, what they will do is they will sell out their portfolio and they will exit from the stock market. This is one of the biggest mistakes. Patience. You should have patience. So you should at least invest for 5 years, 10 years, 15 years. Then only you are going to make the money. In 1 day or 2 day, you are not going to make the money in stock market. Along with that, so if you want to invest into any stock, you should do a lot of research. You should do a lot of analysis. You should do a lot of homework. So then only you are going to succeed here. In 1 day or 2 day, you are not going to succeed in stock market.
My question is, what advice would you give to new investors?
The my best advice would be the stock market. Stock market investment is it looks very easy, but it is not easy as we think. The most of the retail investors they will fail here is they will always look at the short term picture. In the short term, there are maybe a difficult time, there are maybe a corrections, but if you think it as a long term process, along with that, when you invest into the stock, you will invest into the business. When you invest into the quality business, so a quality business like a Reliance, Titan, HDFC Bank, DMart, so these are the quality stocks. In the long term, they are going to grow. When these company grows, automatically your money will grow. But in the short term, they may be facing a lot of difficulties. You don't worry about the short term. In the short term, there are maybe a correction, there are maybe a difficult time. But if you look at the bigger picture, if you think at the long term process, definitely you are going to create huge wealth. You should always look at the bigger picture with regards to stock market investment. You should have patience. So if you it can be any industry, it can be anything. If you have enough skill, if you have enough talent, but if you don't have the enough patience to travel their own way, you are not going to succeed here. So that's the reason patience will play very important role in stock market. If you have the patience, then only you are going to succeed here, then only you are going to create wealth. Along with that, we should do a lot of homework with regards to their business model, their key risks, what is the competitive advantage they are having, what is their management. So that's all about from my end.
Sir, thank you from all of us. I would like to thank you for sharing your knowledge. Sir. It was really helpful for us.